Hi everyone, Ricardo Gonçalves here from the SBS Newsroom. We'll be taking you through to the RBA interest rate decision live in just about 1 minute's time. The market pretty much expecting a 50 basis point increase to the official cash rate, taking it from 1.85% to 2.35% if that's what happens. And again, that would be the fifth rate rise in a row and one of the strongest increases in interest rates we've seen since 1994, when the cash rate then went from 4.75% to about 7.5%. Of course, the RBA wants to keep inflation in check. It's still running at 6.1%, way ahead of wages and way too hot. And there are still the expectations that the inflation rate will continue to rise. So we're still waiting from that decision from the RBA. The Australian share market is currently trading steady at 6,858. The Australian dollar is at 68 US cents. That decision coming from the RBA in just a few moments' time. Of course, there are other central banks around the world lifting rates. The ECB will be looking to lift rates sometime this week as well. That decision should be coming in, and the Reserve Bank has decided to lift official interest rates by 50 basis points. So the official cash rate has gone from 1.85% to 2.35%. So I will go through the statement right now just to see if there's any interesting stats from the RBA. The RBA is saying it's committed to keeping inflation at 2 to 3%, or returning inflation to 2 to 3%, and is seeking to do this while keeping the economy on an even keel. It's noting inflation in Australia is the highest it has been since the early 1990s, and as I said earlier, is expected to increase further over the months ahead. Inflation is expected to peak later this year and then decline back towards its target band. The central bank's forecast for CPI is around 7.75% over 2022. And then returning to around 3% in 2024. On the economy, it says the Aussie economy is continuing to grow solidly, and national income is being boosted by record level of the terms of trade. We actually saw the balance on goods and services today come out today, with the current account surplus continuing to be even healthier. The unemployment rate declining. As we know, wages growth has picked up from the low rates of recent years. The RBA is saying there are pockets where labour costs are increasingly risky. One area where it's really concerned about is the behaviour of household spending. It says, of course, higher inflation and higher interest rates are putting pressure on household budgets, with the full effects of higher interest rates yet to be felt in mortgage payments. Now, that's actually quite interesting, because the Commonwealth Bank said yesterday, and we'll go into more detail later today, that it usually takes about 3 months for an interest rate rise to be felt by its variable mortgage customers. So now we're about 5 months into those interest rate rises. The RBA also saying that the increase in interest rates today will help bring back inflation to its target. The board expects to increase interest rates further over the months ahead. So it can't be more clearer than that. So interest rates will continue to rise. The size and timing of future interest rate increases will be guided by the incoming data and the outlook for inflation and the labour market. So what will this interest rate rise mean for you? Well, according to the team at Rate City, if you've got a $500,000 25-year mortgage, your monthly repayment will increase by $144. If you add all of the rate rises that we've seen since May, you'll be paying $614 more a month. That's assuming the big four banks will continue to pass on those rate rises in full, which of course it is expected to do. So just confirming, the RBA has lifted official interest rates from 1.85% to 2.35%. We will have full details on SBS World News. I'll also be speaking with CBA senior economist Belinda Allen on the during the bulletin, and you can hear that interview in full on the SBS On the Money podcast.